Welcome to this explainer. Today, we're not talking about your typical buy and hold forever kind of stock. We're looking at the Mosaic Company, ticker symbol MOS. If you pull up a chart of Mosaic over the years, you are absolutely not going to see some smooth, predictable path of compounding growth. Instead, it's more like, well, violent waves. Fortunes get made and lost as investor sentiment swings wildly from absolute euphoria to deep, deep despair. So let's demystify the illusion versus the reality of these cycles and uncover what is actually happening with Mosaic right now.
Okay, let's dive right into this. Here's our roadmap for today. We'll start with the fertilizer boom and bust. Then, we'll ask if the stock is a bargain or a value trap. After that, we're evaluating the big risks, followed by catalysts for a turnaround, and finally, we'll check out Wall Street's mixed verdict.
Section 1. The fertilizer boom and bust.
The absolute crucial starting point here is understanding what a cyclical stock actually is. It's an asset where earnings move in violent waves based entirely on commodity cycles, not smooth compounding over time. Now, Mosaic is a massive titan in phosphate and potash, which are two absolutely non-negotiable nutrients for growing food, period. When crop prices are high, farmers make money, fertilizer demand skyrockets, and Mosaic's earnings practically explode. The stock suddenly looks incredibly cheap compared to those peak profits, and that creates this really dangerous illusion that the boom times are permanent. But spoiler alert, in commodities, they literally never are.
If we look back historically, we see these massive, distinct valuation spikes in 2008, again in 2011, and that incredibly huge recent surge we saw from 2021 to 2022. During these highly favorable cycles, earnings surged and valuations spiked right along with them. But here's the mistake investors make over and over again, treating these peak years as the new normal. Because as soon as fertilizer prices inevitably normalize, margins get totally squeezed, earnings crash back to earth, and the stock reprices much lower. It's a roller coaster, you know? And treating it like a high-speed train is a guaranteed recipe for getting burned.
Moving on to Section 2, bargain or value trap.
Right now, the stock is sitting around $23.80. And historically speaking, that puts it right at the lower end of its valuation range. It's sitting close to the absolute bottom of its historical low valuation path. So on the surface, it looks like an absolute steal. It looks statistically cheap. But in the wild world of cyclical stocks, a low price tag alone absolutely doesn't guarantee a good investment.
We have to weigh two completely conflicting realities right now. On one side, sure, we have that statistical cheapness. But on the other side, extremely poor earnings visibility. And here's why that is so alarming. The company's Q1 2026 results actually included a loss. Even more concerning, management completely pulled their phosphate production guidance because raw material costs just became way too unpredictable to even forecast. Guys, this is the textbook definition of a potential value trap. The stock looks super cheap, but investors are completely hesitating because no one actually knows when earnings will stabilize. The stock is currently priced for skepticism, not perfection.
Section 3. Evaluating the big risks.
So what is everyone so worried about for 2026? The biggest risk isn't that fertilizer suddenly becomes irrelevant. I mean, we all still need to eat, right? The primary risk is a brutal domino effect on their margins. Here's exactly how it plays out. Step 1. Input costs. We're talking raw materials like sulfur and ammonia. They rise rapidly. Step 2. The prices they can actually sell the finished fertilizer for, those stagnate. Step 3. Profit margins compress incredibly fast and earnings fall right off a cliff. Because Mosaic is heavily exposed to phosphate, this exact margin squeeze is the very reason management had to pull their guidance. When your inputs rise faster than your selling price, visibility completely disappears. And honestly, the risks don't just stop at phosphate margins. We have to look at the broader macro headwinds. First up is farmer affordability. Picture a farmer sitting at the kitchen table doing the math. If crop prices are down, or borrowing money is suddenly way too expensive, they might decide to delay fertilizer applications just to save cash. That creates a huge volume pressure across the whole supply chain. Then you have potash volatility, which depends heavily on global supply discipline holding up. Next is their massive exposure in Brazil, a crucial market for sure, but one that is super prone to wild currency swings and floods of cheap imports. Finally, cash flow sensitivity. Even if earnings are weak, Mosaic literally still has to spend heavy capital to maintain their mines. It's a bit of a perfect storm, and it's exactly why the market is sweating right now.
Section 4. Catalysts for a turnaround.
Okay, yes, but remember, cyclicality works both ways. Remember that farmer who delayed buying fertilizer? Well, that delayed demand doesn't just evaporate into thin air. It builds up as a deficit in the soil, and this creates a massive short-term opportunity, restocking demand. When crop economics finally tick upward or buyers suddenly start worrying about global supply shortages, sentiment flips instantly. We're talking overnight. It goes from a cautious, let's wait and see, straight to a panicked rush to secure supply right now. In fertilizer markets, that shift is incredibly powerful, and it can transform a company's earnings almost instantly.
Because here is the absolute biological reality. Farmers can reduce nutrient application temporarily, but under-application eventually hurts yields. You simply cannot cheat the soil forever. When you add in the long-term macroeconomic tailwinds, like a constantly growing global population, incredibly limited arable land, and constantly depleting soil nutrients, these fundamentals guarantee a massive baseline long-term need for fertilizer. And that keeps companies like Mosaic highly strategically relevant.
So what exactly needs to happen to springboard this turnaround? In the short term, Mosaic doesn't even really need a perfect demand environment. They basically just need input costs to stabilize so those phosphate margins can finally recover. Stabilizing global potash pricing would also act as a massive earnings anchor. On top of that, management absolutely must exercise ruthless cost discipline. Looking longer term, expanding nutrient demand in Brazil is a huge growth driver. Plus, and this is a big one, this industry has incredibly high barriers to entry. You don't just go out and build a new mine and processing plant overnight. The existing producers hold a very serious advantage when the cycle inevitably turns upward.
Section 5. Wall Street's Mixed Verdict.
And this brilliantly illustrates exactly where we're at right now. Looking at the current analyst ratings, the tension is palpable. We have 4 strong buys and 4 buys, but then look at that massive chunk in the middle, 10 hold ratings, alongside just 1 sell and 1 strong sell. Wall Street isn't overtly bearish, but man, they are highly cautious. The bulls look at that incredibly low valuation, and they see massive cyclical upside if margins recover. The bears, they see a value trap. But those 10 hold ratings tell us everything we need to know. The market is screaming for confirmation. Analysts are sitting entirely on their hands right now, waiting for some hard evidence that the earnings trough is finally over.
Which brings us to the ultimate question we're left with today. Is the cycle finally bottoming out, setting the stage for a really powerful recovery? Or is this just another value trap waiting to catch the unwary investor? Mosaic is a high-risk, deeply cycle-dependent recovery idea. It definitely doesn't need perfection to succeed from here, but it absolutely needs proof that the worst is in the rearview mirror. Think about how those massive macro winds are shifting in agriculture and ask yourself, has the market priced in just a little too much fear? Thank you so much for joining me on this explainer today. Keep analyzing, keep asking the hard questions, and I'll catch you next time.